Hello everyone. Our today's topic is government budget. Okay, it's a topic of macroeconomics. Okay, and this is not chapter 4, this is unit 4. Okay, this is unit 4. So let's start the chapter. So first, what is government budget? Okay, we all have heard about this thing, budget. Okay, which releases on the 1st of February. Okay, so let's see what by definition what is it called. A government budget is an annual financial statement. Okay, the official name of budget is annual financial statement. Mark it. Official name of government budget is annual financial statement. Okay, so a government budget is an annual financial statement showing item wise estimates. Remember, it is estimate, not the actual. Okay, estimates of expected revenue and expenditure. Okay, estimates of expected revenue and expenditure, that if budget is being published or being released for year 2023 and 24, means budget is released on Feb 23. Okay, and it will continue till 31st March of 2024. So from 1st April 23 to 31st March of 2024, how much revenue is going to be collected or received by the government, and how much expenditure is going to be incurred by the government, expected. Okay, not actual but expected revenue and expenditure, which is shown item wise or in the sequence. It is called government budget. Okay, and it is during a fiscal year. Okay, fiscal year means one financial year, from 1st April to 31st March. One financial year is starts from 1st April and ending is on 31st March of the next year. Okay, now some basic facts here, okay, which you should know as a GK question. First is, the first union budget of independent India was presented by R.K. Shambhukam Chetty. Okay, he was the finance minister at that time. Okay, and the first union budget was presented by the R.K. Shambhukam Chetty. Second is P.C. Mahalanobis. He is the most famous economist. Okay, the second 5-year plan, the role in the second 5-year plan, the major contribution is given to the P.C. Mahalanobis, and he introduced the concept of union budget in independent India. Okay, he introduced the concept. Okay, now second thing, from 2016 railway budget was merged into the union budget. Okay, earlier, before 2016, railway budget was presented separately and union budget was presented separately, but now from 2016 they both are presented as one budget. Budget 21 and 22 was entirely an electronic budget. Okay, it was not presented on hard paper, it was presented on soft copy. Okay, means electronically on tablet or anything. Budget is presented on the 1st Feb of every year. Okay, so these are the basic facts which you should know. Now the second thing which we will do is the components of government budget. Okay, it means ghatak. In Hindi we call it ghatak of sarkari budget ke ghatak. So what are the components, or what kind of things budget include? Okay, so budget is divided into two parts: budget receipts and budget expenditure. Okay, budget receipts and budget expenditure. Receipt means government is getting money. Expenditure means government is giving money, paying money. Okay, now this receipt is divided into two parts: revenue receipts and capital receipts. Okay, in the same way, budget expenditure is divided into two parts: revenue expenditure and capital expenditure. Okay, so basically there are four things here, four components: revenue receipt, capital receipt, revenue expenditure and capital expenditure. Okay, Now first we will see the budget receipt. Okay, so before that we will see what are the assets and liabilities, because these two terms are very useful, or will be used in these four revenues and in these four receipts and expenditure. Okay, so what are the asset? Basic things: these are the items which provide future benefits. Okay, those items, or I would say those individual which provide future benefits, future economic benefits, means in terms of money, those are called assets. Okay, which puts money in your pocket. Okay, what are liabilities? What you owe to other parties, either which takes money out from your pocket. So the thing which takes out money from your pocket, or for which you have to pay money, those things are called liability. Okay, so these are the basic things. These terms will be used. Okay, now let's see. The first one was revenue receipt. Okay, so there are two conditions. Okay, if a particular item is to be counted in revenue receipt, so two conditions must be fulfilled. Okay, so those receipts or those money which neither create liability nor reduce asset. Okay, those money means if government is getting money, okay, government is getting money in its account, in bank account. Okay, and for that money government is not reducing asset and neither creating liability. Okay, means government does not have to pay that money back. Okay, means if government is getting money in his account, so if this money is not doesn't reduce the asset. Okay, or second thing, if government doesn't have to pay this money back, okay, then this money will be counted in the revenue receipt. Okay, let me explain again. If government is getting money in its bank account, and for this money government has not sold any of its asset. Okay, government is getting money, but government has not sold any asset. Okay, any of its PSUs. First thing. Second thing, government does not need to pay it back. The money which government has received, government has not need to pay this money back. Then this money will be counted under the heading of revenue receipts. Okay, for example, the tax revenue, the money which government gets from the taxes like income tax, corporate tax, custom duty, GST and all. So government gets money in form of tax, but that money doesn't reduce the asset. Okay, for that money government has not to any government doesn't sold any of its property or any company. Okay, any land or any building, but government is getting money. Okay, so that money is not reducing asset nor creating any liability. Means if a government is getting income tax, so that government is not supposed to pay it back. Okay, liability means which takes out money from your pocket. So this income tax is the revenue. Okay, and government doesn't have to pay this income tax back to the person. Okay, so this income tax or all the taxes which government gets is called revenue receipt. Okay, now second example is non-tax revenue. Okay, the money the government might be getting money in form of tax or not in the form of tax. So what are the non-tax revenues? Like interest. If government is getting interest, government gave the loan to the state government or any other person, and government is getting interest. Okay, so government is not supposed to pay the interest back. Okay, and neither the government is selling its property. Okay, so that interest will be counted as the revenue receipts. Government is getting profits from its PSUs, government is getting dividends, government is getting fees which you pay for for competitive, when we pay fees for competitive exams. When you, if you are in 12th class, you will have to fill the CUET form. For that you have to pay the money. That money, that fees will be counted as the non-tax revenue, and in this non-tax revenue it will be counted in the revenue receipts. Okay, when you pay the fines for not wearing the helmet or for not wearing the seat belt, okay, the aid, the grant, the help, the financial help which governments get from outside during the natural calamity, okay, these are called the non-tax revenue, and these are part of the revenue receipts, because money, government is getting money in these forms. Okay, I repeat again, government is getting money in these forms, but for that money government is neither creating liability, okay, and neither reducing its asset or not selling its property. Then these money will be counted under the revenue receipts. Okay, now second thing is capital receipts. Now it is opposite. Okay, government is getting money, but it either that money is reducing asset or that money is creating liability. Okay, the money which government gets, but that money either reduces asset or either create liability, that money is called, that money will be counted under the heading of capital receipt. Okay, like borrowing, example is borrowing. So government, by borrowing, okay, by taking loan from the World Bank, government is getting money in its bank account. Okay, but government has to pay that money. Okay, that money will be put out from the pocket of the government. Okay, government is getting money, but that money has to be paid later on by the government, so it is creating liability. Okay, disinvestment means selling a portion of the public sector undertaking or its asset or any property. If government is selling, like Air India example, the best example for nowadays is Air India. When the government disinvest or privatize the the Air India, by selling Air India, the government gets money in his account, but what happened, that money reduces the asset. Okay, recovery of loans means whenever we give a loan to any organization, that person, that organization becomes the asset for us. Why? Because that person, that organization will give us money. Okay, so if the government, if the organization has paid the loan, okay, means our loan is recovered, then our asset is reduced. Okay, small savings like Kisan Vikas Patra and all, the small savings which we do in the government banks or in the post offices, that government has to pay that money later on, after 5 years or after 10 years, after the money is matured. Okay, so that small saving is reducing the creating the liability. Why? Because government is getting money through small savings, but government is liable to pay that money after the fixed period of time. So whatever the money government gets, if that money is reducing the asset or it's creating the liability, then that money will be counted under the heading of capital receipts. Okay, so this was the component of budget receipt. Two things, revenue receipt and capital receipt. In next lecture we will see the revenue expenditure and capital expenditure. Okay.